following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Seam in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
That's Hotel California. It's wicked, isn't it, man?
Thanks. All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Accept your own beauty. You are beautiful no matter what your mind tells you. That is a fact. If you're aware of your own beauty and accept your own beauty, the opinions of others don't affect you at all. Market-wise, let's take a look at it out here. We have the Dow Industrials down 32. NASDAQ is flat. S&Ps are down 6.5. Gold contract up $5.20, trading at $1,316 an ounce. Silver up 21 cents at $18.84 an ounce. Platinum down $6 at $1,045 an ounce. Copper flat at $2.07 a pound. Light sweet crude getting toasted and roasted, folks. Down $1.45, $43.26 a barrel. You got wide price spread. You get the volume. Oil wants lower price. Notes and bonds. Man, you talking about volatility. We got it out here in spades coming into this jobs number tomorrow. Notes and bonds right now, they're both flat. 131.28 for the notes. 171.27 for the bonds. My take, notes and bonds want lower price, higher yield. What is that setting up? That's setting up a good jobs number tomorrow, and I expect what you're going to see is this market's not going to like that good jobs number. King dollar. King dollar down 347 ticks, trading at 95.66. Euro is trading at $1.11, and the yen is at 103 1/3. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? World of the S&Ps, let's take a look at them. What do you have? Okay, so we got another sideways day. You're doing 76 million shares. Bottom line, what I expect you're going to see out here tomorrow, we're at $216.82. And at $216.82, you're actually in the lower range. And now, needless to say, the range is so small, it's pretty amazing. What we have is this, is that the top of the lower range, though, is 217.01. And bottom line is that that's saying that the S&P, the SPY, wants to get down into 214.25. NDX 100. What do we have at the NDX 100? Now, the NDX 100 has been leading the charge and giving us the best information as we've been going sideways. So the NDX 100 today, sideways move again today. You had a low out here of $115.91. We get a high of $116.88, and it looks like you're going to trade out at the lower end of this range right here. And more than likely what we're going to see, let me just pull this up for a second, that you're going to see someone just whack the market again. We're going to be down into the 116.18 area. So the Qs can give up another, that looks like another 20 or 30 cents as we're coming into the close. We take a look at the gold contract. What do we have with gold? Gold contract out here today traded from a price point of $13.18 to $13.05. Right now, you're at $13.17. I suspect what you got here, folks, this is the halfway move down as to where gold is trying to get into. I suspect what we're going to see out here, more than likely we're going to see it tomorrow, too, is that it's going to make a run for this 1259. The 1259 area is where we broke topside from on June 24th. We go take a look at the silver contract. What we have with silver out here is this. Silver is trading at $18.94. You have 45,000 contracts traded. Silver, you're coming into 55,000. That's just not enough volume. Let me see here. $19. Yeah, we haven't hit the $19 yet either. Yeah, $19.04 is the swing point. So silver wants lower price also. Now, bonds. Let's go to the bond market because this is going to be the wild one, folks, okay? And this is what we have. The 10-year note out here is trading flat today. That being said, what you have, you're in the lower end of this range. As soon as we got under the 131.12, bottom line is that 130.26. Actually, we're 4 ticks above it right now. So 130.26 is the number watching coming into this close out here. Right now, you're at 130.30, and I expect what you're going to actually see on this baby too is that as we come into the close, you're going to see a little bit of selling. This morning, you had the bonds were down. You had the manufacturing number come in light. That sent the bonds up. When it first happened, it not only sent the bonds up, it had sent the Dow all the way back topside. What I expect you're going to see here as we come into the close, which is really deviant, is that you're going to see the selling start once again inside the marketplace. We take a look at the 30-year. The 30-year right now, this is where we have the 30-year. 30-year right now is trading at 171.28, and that is a sideways move. Actually, USZ. $30-year right now is trading at 170.14. We've done 227,000 contracts. You know, bottom line, that's a sideways move with some decent volume, by the way. King dollar. What do we have with King dollar? King dollar has had wide price spread today. Has had quite a bit of movement. King dollar had been trading as high as $96.24. It's at $95.66 right now. But guess what? The breakdown, as you went to lower price, is not even close. You're coming into 41,000 contracts, and we did 18,000 today. We made it to a price point of $95.59. Your high of the high volume day, which is the sign of strength, is $95.58. Right now, you're at $95.65. So what that is doing is that it went into the high of the day of strength. It's rejected it. And at this particular point, we're going to have tremendously lighter volume. So it's going to be wild watching this whole thing shake out, meaning the jobs number tomorrow morning. Why is the jobs number tomorrow morning? What you have out here, folks, is this. The jobs number in particular tomorrow morning, as to how Janet Yellen was speaking, meaning the type of information, the amount of information that's coming in the marketplace is either going to give them more ammunition to go up in the rates, whether that's September, November, or December, or less ammunition to go up. You come in with a hot jobs number. Bottom line is that you can expect that you're going to see the market react, that there's going to be higher rates, I expect, in December. You know, we'll see if, in fact, they go up at all. But it's going to be the reaction of what the market takes as, oh, no, good jobs number, bad for the market. Pretty wild, right? Deviant beyond belief. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 20. You get the NASDAQ up 2. S&Ps are up, they're down 5. Now, as you come over to our website at TFNN, folks, what you're going to see right on the carousel is you're going to see celebrate the 750th issue of the Gold Report. This is hard to believe, actually. So this Tuesday, folks, is the 750th edition, which is, I guess, 14 years, right? What a trip in itself, okay? It's hard to believe it goes like that. Anyway, we're doing a celebration. The celebration is on from right now until Tuesday morning. And this is how it works. If you'd like to get the Gold Report -- 1, normally it's $1,020 a year. You can get it for $750 until this coming Tuesday. The Gold Report in general is a investment newsletter. You'd be getting in. We've been flat. We rode this baby up from January right until about a month ago. So we've been flat for a month. Bottom line is that not a bad way to get in. I don't expect we're going to be buying until the next few weeks either, because I expect it to go lower. But check it out on the front page of TFNN. Now, along with that, what we've done is that until Tuesday, we do these Tiger Dollar sales. So we have a Tiger Dollar sale going on, and in this particular case, we haven't done something like this. I forget the last time we did it, actually. And it has to do with the amount of bonus that you can get. If you have any subscriptions at TFNN, you can save quite a bit of money, and this is how it works. You can buy $600 in Tiger Dollars, and that gets you $750. So you get a $150 bonus, or 25% bonus. The second one is the one that we haven't done in years, and what that is that you can buy $1,500 in Tiger Dollars, and you'll get $2,250, which is a 50% bonus. Or what it does is that it's $750, and that's why we did it that way. So we're celebrating the 750th report. You can check it out on the front page of TFNN. As I said, you have from now until this coming Tuesday to take advantage of all of those. Now, folks, let's go over to our man, Mr. Andy Heck. And, of course, Andy's got an outstanding show every Tuesday, Thursday, right here at TFNN, 5 to 6 Eastern Standard Time. It's the Technomento Commodity Hour, as well as he has a great newsletter, the Technomento Commodity Report. You can test drive that by coming to our website at TFNN. You hit newsletters, you hit trading newsletters, and you can check that out. Now, remember, no matter where you are right now, if you're listening in your car, remember that you can get us right on your cell phone. TFNN.com. You just hit Tiger TV. You're going to get some great HD audio and video. Eddie Heck, what's going on?
Hey, happy September.
Yeah. Happy September. What a trip that is, huh?
It's amazing. Yeah, time goes fast.
Time
goes
just
fast.
keeps going, man. It's the only thing you can't get back, folks.
That's for sure. So everything is kind of wait and see mode for tomorrow.
Yeah.
The market expects 180,000 jobs.
Right. And they'll probably get it.
Well, you know what? Anything over 150 is going to be okay for the Fed.
Sure.
Unless the number comes out like 50,000 or something like that, then all bets are off. But
Right.
Who knows? We'll see. The ADP numbers were good, but sometimes they diverge. I'm not sticking my neck out on this one because anything is possible. August is generally a weak employment report. It has been historically. So we'll see what happens. Meanwhile, the gold stocks, the mining, the equities are up nicely today. Gold's up a little bit. Silver's up a little bit, but the platinum and palladium are down, very weak here. The markets look heavy. They continue to look heavy.
Yeah, no, listen, I'm a bear. I'm a bear right here,
Yeah, I mean, I don't think it's going below 1220, but I think it could go to 1260. Feels that way.
12, you mean gold?
Yeah, gold.
Yeah, right. No, it looks to me, and folks, the equities are bouncing, but my take is that they're doing a B2C of a much larger ABC down. Because, there's some problems out here, and it really has to do with, I think it has to do with this dollar. And we'll see where it shakes out, though. We're gonna know real soon, man. We're gonna know.
We'll know tomorrow.
Yeah, we will.
We'll know tomorrow, and then we're gonna go into wait and see mode because tomorrow they don't raise interest rates. We have another 3 weeks for that.
Yeah, no doubt.
Right.
And
right.
And man, if this number does come in really hot, and if the market thinks they're gonna raise in September, get out of the way, man, because that the market is not ready for a raise in September, even though it's only a quarter. The market should be, but the market's psycho anyway. So,
well, yeah, it's I think big volatility's on the way starting next week. Man, tomorrow, we'll have an initial knee jerk to the thing, and then it'll follow through on Tuesday because of the long weekend. Oil is ugly here. I mean, we talked a lot about oil while it was going up, Tom.
yep.
And I was concerned about two things. The first thing was the high level of open interest in oil, which was telling me there were a lot of shorts in the market. The market cleaned those shorts out, and right after the September contract rolled to October, we kind of peaked.
Yeah.
And we've started to come down.
That was the peak. That was the roll was the peak, folks.
But
right?
I was really, really concerned that oil product prices continued to be weak. And today, they're even weaker.
They are, man. What Andy's talking about, folks. So check this out. Gasoline is down 4.5%.
Yeah. Well, the gasoline crack spread is at $10.
Okay.
Last year at this time it was 14. This is a weak time of the year, and 14 is a weak number. So 10 is ridiculous. The heating oil, the refineries make very little money at $10, if any. They probably lose. At the heating oil crack spread is down at below $15. Last year at this time it was at $21 as we get ready for the winter season. The refineries get ready. So that weighs heavily on crude oil. And I think short term, crude oil is, listen, it's below the middle of the range, 39.96 up to 49.36.
Yeah.
We're below there now. There looks like there is some downside room, but longer term, I'm getting more positive towards oil for a lot of reasons, most of them political reasons. But hey, could oil go back down and look below 40 again? Absolutely.
Isn't it wild, Andy, and folks, how folks, what it did, it almost made it to the $50. It only missed it by 60
64 cents.
Yeah, and then just gave it up, man. Just gave it up in spades, man.
It's a good lesson for us because you know what? Open interest and when the market gets too over exuberant on one side or the other,
yes,
that tends to cause the market to turn. Let's look at another market here that's turning a little bit because the market's a little bit over exuberant. Sugar spent a lot of time around 20 cents. And recently it's come down and closed today at around a little bit below 1960 or so.
Yeah.
But so sugar open interest has been rising steadily. So there's a lot of longs in the sugar market here. So maybe they have to be cleaned out. And
Oh, yeah, look at that volume today, man. Oh, yeah.
Yeah, they got to be cleaned out of this market. So very interesting. But if you look at a market like cocoa, there aren't a lot of fundamental or technical shorts or longs in the market as open interest has come down. So that has some room, and that market is looking pretty good to me here.
So
The coffee
cocoa, we're
market.
trading at $28.97 a ton.
No, coffee.
Coffee. Oh, okay,
Coffee.
okay.
Yeah.
Yeah, you stay right there. Andy and I come right back, and we're going to talk cattle, too, folks. Cattle was limit down out here today.
Yeah.
Our phone number is 877-927-6648. Dow Industrials right now are down 21. The NASDAQ is up 2. S&Ps are off 5. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 22. The NASDAQ is up 2. S&Ps are off 5.5. We're talking about Mr. Andy Heck, and we are talking commodities. So what would you like to talk about next, Andy?
Let's go there. Down the limit. I mean, cattle's kind of all over the place. On Tuesday, we had a bullish key reversal on pretty good volume.
Okay.
It made a new low, closed above the previous day's highs.
Look at
Followed
that.
through a little bit yesterday, but collapsed. And today it's down the limit. You got feeder cattle down almost 4 cents. Bottom line, end of grilling season. It's a little seasonal. There's just a lot of selling in cattle.
Yeah.
Cattle right here. The curve is flattening out. Backwardation is kind of disappearing here at lower prices. We're down in the area of important support around $1 a pound. When soybean meal was flying earlier in the year and the grains kind of ticked up, I think a lot of heads of cattle went to processing plants, and there's a surplus on the market right now.
Yeah, this is quite
don't expect that to continue next year, though.
Right. We just, when you take a look at this for, a few years, we've gone from $171 a pound to the $1.03. And the ranges, though, yeah, see, the range was forever like 70, 80 cents, right? I mean, it's intriguing.
That was way back there. But look, if you look at all the commodities, oil traded between $20 and $40.
Yeah.
Now $40 is considered a low price. Copper traded between 80 cents and $1. Now it's $2, and people are saying it's cheap. Gold was $300 an ounce. Now it's over $1,300.
Well, hey, so check this out. You just heard, I'm doing the 750th report on Tuesday, right? Mm-hmm. And this blows my mind, folks, because, number one, if we take this gold contract back, I remember the exact date I started it. Gold was $282.50 because I was actually trading it. But the mind blower, this is the thing that you got to make sure. Yesterday's gone, tomorrow's not here. What are you doing right now, folks? What blows my mind? Okay, so if I fast forward 750 weeks from now, I'll be freaking 80 years old, man.
That's young. That's like the new 60.
Oh, man, it better be.
It's just the new 60. That's all it is. It's not even midpoint for you.
Yeah, that's right. I like that. It's kind of scary, actually.
That's right. The 1500th report we'll be talking about.
It went so fast. We're going to be talking about it. We're going to be right here in Tigers Den trading because I'm going out on this desk, man. That's the bottom line.
No question. So look, tomorrow's a big day for all the markets. They're all kind of sitting here, and tomorrow is a number that the Fed has told us is important. It's just another employment number. You know what I mean?
Right.
There's going to be a lot of things that happen between now and September 20th. There's going to be a lot of things that the Fed is going to think about. We got this crazy election coming up. In the first week of November. Let's not forget, folks, that 6 weeks after the Fed comes out and makes their statement is the presidential election. And don't delude yourself to thinking that the Fed governors are not going to be talking about the election in their meeting.
Right.
And the volatility that can be associated with this particular election.
Yeah.
So I don't think they're going to raise in September. I think they're going to do it in December. Just like they did last year. They did the same thing last year, Tom.
Yes,
they
did.
strung everyone around all year long. We're going to lift off. We're going to have liftoff. They waited to the last moment.
Yeah.
Fisher is the attack dog, and Yellen kind of smooths everything down. Tomorrow's number, the market's going to react. But if the markets react sharply tomorrow, they're going to bake in a September rate hike, and that'll set the markets up for more volatility September 21st if it doesn't come. Or it could even be a case of kind of like buy the rumor, sell the news, or in this case, sell the rumor, buy the news.
Right. That's what's so wild. Tommy and I were talking about this morning. What Andy just said, folks, is that you could get, well, the theory goes you get a good number, that's going to say that, okay, they're going to go up in the rates and the market would get tanked. Well, guess what? You might get a good number, and the market might decide to say, hey, guess what? The economy's really going, and we're going to buy everything now.
Right.
It's I know. Listen, I know.
All perception.
I know.
All perception. So natural gas. I want to talk about
natural gas. Yeah.
That's down 8 cents
gas
today.
Numbers come out today. That's right.
Right, and they came out kind of high, 51 BCF injection.
Yeah.
But I want to put that into perspective for everyone because the market's selling on that, and I think this is a place to buy natural gas.
Okay.
Let me explain why. This year, last week, as of August 22nd, I think it is, we are like 7.5% above last year's level. We increased by 51 BCF, but last year, the number was something like 96 BCF during this week. And we're still 46% slower growth rate in inventories this year. And natural gas, to me, is a very political commodity here. I'll tell you why.
Okay.
And I know we discussed it a little bit last show, and you said that Hillary might pivot. But, right now the two parties, their platforms are very much kind of, one is energy independence, the other one is a little bit more regulation. A little bit more regulation is going to add to the already heavy regulation costs in the fracking business. And that's going to raise the production cost, and that's going to make inventories trickle in even less than they are doing. So I expect a lot of volatility in natural gas, but the bottom line, Tom, below $3 in this environment, producers aren't making any money.
Right.
So, and less inventories. We get a cold winter this year, they'll suck down those inventories really quickly. But in the meantime, the shorts are so trained to sell, to smack any rally in this market. And even moves like today give them kind of the impetus to come back. And, they still have visions of prices below $1.70 per million BTUs in their mind, which is still more than $1 below the current price. I think natural gas is a nice setup. Eventually, we're going to go after this $3. We should take it out. You got to take profits there, certainly.
Sure.
But, I don't see this thing cratering here. The market read too much into this 51 BCF. You got to compare it to where it's been in the past. It's not a big injection number for the last week of August.
And, I guess, what I'm hearing off you is that we're coming into the winter, too, right? I mean, natural gas kind of has it both ways. Like, when you look at the NOAA side, they're saying it's the hottest summer that we've had, so people need air conditioning, right? And they use that natural gas for air conditioning, too. So it's
right.
kind of
they do, but it's mainly a heating commodity.
Okay.
It's mainly, that's really what drives it. If they were using it so much, you wouldn't see, the stark injection season in the summer and the withdrawal season in the winter, where inventories go up and down like a yo-yo on a seasonal basis, and that does affect the price. But look, these markets are frenetic. They move like crazy, and we have to remember in futures, just because it's Labor Day weekend coming up, it's still nice and warm out there. Futures markets do exactly that. They look at the future.
Right.
The futures markets are down the road. Right now, in things like natural gas, we're looking October, November, December. In oil, we're looking, the Brent crude contract already rolled into November. So Brent is trading winter kind of temperatures now.
So we're gonna basically have a warm winter then. That's what the oil contract.
We'll see.
I have to love it.
I haven't talked to Mother Nature lately.
Oh no, why not? Dial her up. Andrew 8000, man. Hey, listen, you have a great one, safe one, and we look forward to the show at 5 o'clock, Andy.
Thanks, Tom.
Thank you. Stay, folks, are coming right back. The Dow Industrials right now are down 23. You get the NASDAQ up 2, S&Ps are down 5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. The Dow right now is down 5. You get the Nasdaq up 8. S&Ps are down 2. And if we go take a look at the volume out here, what you're going to see, yesterday, folks, what you had is that they laid right into the volume. We did 1.1 billion shares in the NYSE yesterday, and what you have there is that you talk about pushing juice into the lows, and that's exactly what you did the last 10 minutes. That was a huge amount of equities that got sold. What I expect you're going to see out here today is the same type of deal, and what that means to me is that you're pushing into the swing low of August 2nd. Right now we're at 18,393. 18,247 is the swing low that we're talking about from the 2nd. The high of that swing low is 18,403. So you're pushing into that level, and you're pushing in with volume expanded. Now, it's really going to be cool. We'll do this today because I will be, yesterday I only could do an hour because we had such a big storm here. Now, we get a storm here now, but it's pretty wild is that the storm was actually worse yesterday than it is today. We get the tropical storm coming in. But anyway, to make a long story short, what we have is this. Right now, we are at, 343, and you're only at 597 million shares in the NYSE. Now, what I'm expecting, and it'll be really insane if this ever goes up to 1 billion shares. I'm thinking we're going to get 800 million. But you go up to 1 billion again, and that's going to be like, who is unloading in this market and unloading in an incredible way before that jobs number comes out tomorrow. And then as the composite, you're at the same situation. Now, the composite did the same thing yesterday. Right now, if you happen to be watching Tiger TV, you're going to see beside the numeric value that's up, which is 1.3 billion, you're going to see an L, meaning that's, as of right now, which is 15:44 hours, that is the lowest of the year. That also will go. And that, in fact, has been going up every day, and we haven't got the lowest of the year, where in the NYSE we have. But I expect that number there also is going to jolt higher, and more than likely that could get into the 1.8 billion, where yesterday we did the 1.7 billion. That's just kind of how that is shaken out. If we go take a look at the strength versus the weakness in the market right now, this is what you have. Inside the Dow Industrials, Walmart is the leader. That's up 1.9%. You have Nike up 1.5%. Procter & Gamble's up 0.8%. And Verizon, Visa is up 0.4%. Taken away from it on the way down, you have American Express down 1.2%. Caterpillar's off 0.8%. You got Goldman Sachs down 0.7%. And Chevron is off 0.6%. Inside the Dow Industrials, it's going to be kind of interesting. I want to thank one of the targets. Someone was putting up there about GE wasn't looking good. It's not only not looking good, GE is a confirmed ABC structure on the way down. It's going to have to, it's a complex one, actually. It would have to close under the $31 level. But General Electric is pushing on its swing point and has the volume behind the move. And that's on a light volume market. The A point on this would be 33. Your B point is 31, so you get a couple of bucks. Your C point is 31.45, which would give you 29.45 would be your price objective. And guess what? At $29.17, you get a high volume low. So GE is projecting that it wants to go down there. The cool thing about that is that when you get information like that, whether it's going down or going up, your probability, in this case because of GE, is that, hey, guess what? There's only 30 Dow stocks. You get a few of them going south like that, that the Dow Industrials will have a problem. If we go over to the oils have the same type of setup. Chevron and Exxon, this is. Chevron is down 64 cents. Now, that's building cause. It's already into the high volume swing from the 2nd of June. The high of that is $100. The low is 97.91. That's going to build cause, I suspect, to go after that low. If we go take a look at Exxon Mobil, with Exxon, Exxon's laying right at it. Hasn't broken it yet. Laying right at it. Exxon had monster expansion of volume yesterday as it traded to lower price. So it's going to be wild watch. And the oil equities in general, of course, can bring that S&P down. You're talking about fast and furious. It can do it. Inside the NDX 100, which is the leader on the slow roll over. Tesla is down 5%. That's down $10.92. You have Costco down 3.9%, or $6.36. Mondelez is down 2.4%, and you get Viacom down 1.5%. The leaders, you have Charter Communications is up 4.7%, or $12. Expedia is up 3.5%, or $3.90. Norwegian Cruise is up 3.3, or $1.20. And Baidu.com is up 3.2, or $5.64. As you're coming over to our website at TFNN, don't forget you have today until Tuesday to take advantage of the special we're doing. What that is that it's the 750th gold report. This coming Tuesday, you can get a full year for $750. That's the first special that we have. The second one is we have a Tiger Dollar sale. And the Tiger Dollar sale, folks, is quite extraordinary. You can buy $600 in Tiger Dollars. You get a 25% bonus, or $750. If you buy $1,500, you can get a bonus of $750, and that's where we're coming from with the 750 edition of the gold report. Now, in both of those cases, in the $1,500 case, you only can do this once. It's one per person, and that's it. So check it out at the front page of TFNN. Let's go to Sam in Philly. Hey, Sam, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. Yourself?
What a nice day. It could be a reversal, man. We don't know it.
That's a beautiful thing, man. It's beautiful up there. That's great. I like it.
Everybody on the other side, and here it is.
Yeah, we're getting a little storm down here. Big storm, actually. But hey, listen, we're not getting a hurricane, so that's good. We haven't had a hurricane in a long period of time, and I don't want one for a longer period of time.
Well, just make you stronger, buddy. That's it.
There you go. I like it.
I'd like to ask you about MUX. I bought it today at $3.50. Is that a good, timing or?
Let's take a look. You got McEwen Mining, folks. Okay, this is a producer, decent producer. Also, Rob McEwen, of course, is a big mover in the market. They produce about 14 to 21 million a quarter. I wouldn't be a buyer here of these yet. This is. Let me just bring this back. This is your first bounce. All of these did the same thing. What they did is that they come off the highs, came down, have some juice underneath them, meaning that, they broke down with some volume. I mean, this to me, it's traded at 357, can go down to 306. So that's where it broke out from. It looks to me that they want to go back to June where they broke out from.
Oh, okay.
Yeah.
So maybe I can just take a quick profit now and go back around.
I wouldn't be long them. I'm not long them. I wouldn't be long them, and I'm a Super Bowl in gold. But guess what? We ran it on the way up, and I wouldn't be long them, man.
Okay.
Okay, have a great one, man. Have a safe one, Sam. Stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 3. The Nasdaq's up 11. S&Ps are down $1.50. And this is going to be so cool watching how this shakes in to the close, because picture, you still only get 6 minutes left, and you're at 633 million. We're going to see. My take on this: we're going to see that number jump in a big way, folks. When I come back right after 4 o'clock Eastern Standard Time on the Nasdaq Composite, you're at 1.4, and I expect you're going to see that number jump also. If we go take a look at the small caps, the IWM, what you have out here, this is pretty cool, okay? So the IWM is rolling, and so check it out. You're only down 6 cents. You've had a spread out here today of $123.63 as a high, $122.02 as a low. Well, guess what? You're pushing down with volume. That's how this thing's shaking out, man. You know, because we had 19 million. We did 29 million yesterday. You're going to see some juice come into that at the close. If we go into the Qs, what you're going to see inside the Qs have done 18 million already, and they're actually at a lower low. You know, we hit $115.91, and more than likely we'll see with the Qs. They'll push a couple million shares into the close at the Qs also. So where this goes, let's put it this way. If, in fact, we get that expansion of volume as we come into the close again. That's just going to be another nice piece of information that this market as a whole wants to go down into this Labor Day weekend. What's going to be wild is this, is that normally, folks, on a Labor Day weekend, everyone would be gone right now. They wouldn't even be waiting until tomorrow. You know, what I expect we're going to have tomorrow is that you're going to have a volatile market, you know, for the first few hours, and then it's going to settle down, meaning at noon. Meaning that, okay, if you're down 100, up 100, then that thing's going to settle out, and the battle will begin the following Tuesday. You know, because what we have, of course, is that this is the beginning of window dressing. You have window dressing today. You have window dressing tomorrow. And in this case, it really doesn't go it doesn't move into next week. So that's the 2 days. And what the beginning of the month brings is that the beginning of month brings new money into the marketplace from all of the folks that the IRA money, this comes out of their paycheck. That goes into the funds, and you know the funds do not get paid on money that is not put to work. You know, so that's what you have out here, and that's what window dressing is all about. So the money, number one, gets into the accounts. Number two, gets put to work, because if the money managers don't put the money to work, they don't get paid on cash in the accounts. And that's, you know, when you look at this market right here, it's like, okay, if in fact we have that happening, why can't the market basically get up over the highs? Well, the theoretical case would be that as funds are coming in buying, guess what? You have larger players inside the marketplace that are just sitting there unloading as the funds are coming in buying. You know, the bulls and bears are fighting this out, and they're fighting it out in a big way. If we go over to the dollar, we look at this dollar as we're closing in on this low, and the dollar, we're at 95.62, and the number is 95.58. So thus far, the dollar has rejected the highs of its day of strength from the 26th of August with dramatically lighter volume. We're coming down. We're coming down with 19,000 contracts. That's going into either 41 or 44,000. Yeah, 41,000. So bottom line is that you're rejecting the day of strength with dramatically lighter volume. You stay right there, folks. We'll be coming back with some numbers after the close. And don't forget, if you want to take advantage of either the gold report or the Tiger dollars, you have from today until Tuesday. Dow Industrials right now up 14, Nasdaq's up 13, S&P's are flat. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy, how you doing, buddy?
I'm doing great, man. Yourself?
Good, pal, good. I'm calling to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great month, folks. Forgive yourself. The supreme act of forgiveness is when you can forgive yourself for all the wounds you've created in your own life. Forgiveness is an act of self-love. When you forgive yourself, self-acceptance begins and self-love grows. Market-wise, let's take a look at it out here. We had the Dow Industrials up 18, NASDAQ up 13, S&P's down 2.5, gold contract up $5.70, trading at $1,317 an ounce. Silver up 24 cents at $18.95 an ounce. Platinum down $4 at $1,047 an ounce. Copper flat at $2.07 a pound. Light sweet crude, toasted and roasted, down another $1.25, trading at $43.51. Bonds, the 10-year note up 1 tick, 131.29. 30-year bond up 4 ticks, 171.31. King dollar down 387 ticks, trading at 95.67. The euro is at $1.12, and the yen is at 103 1/4. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, man, this is going to be a trip shaking out tomorrow morning. Tomorrow morning, 8:30, folks, jobs numbers come out. And what are we looking for? Bottom line, I expect you're going to have a decent jobs number, and I expect that this market's not going to like a decent jobs number. Right now, SPY, once again, sideways move out here. We had a high today of $217.79. We had a low of $216. Guess what? We ended up flat. We ended up 1 penny. That being said, what you actually did is that you went to and this is how subtle it is, which is so cool, folks. You know, well, we'll see how this shakes out tomorrow, but it's so cool in the aspect that what you're actually doing in the marketplace is you're pushing into low price and you have volume expanding. And yesterday in the SPY, we did 85 million. Today, it did 91 million. And once again, it got unloaded at the close out here. When I was just on from the 3 to 4 hour, the SPY had all of 63 million shares traded. It traded another 30 million shares in an hour, okay? Bottom line, that is pushing into those lows. And what I suspect we're going to have is that you're going to have high volatility in the morning, but it looks to me like this market wants to push into lower price. We take a look at the NASDAQ composite. What you have with the composite, the NQs ended up 30 cents. That being said, you actually got down to 115.91, and you did that with volume expanding also. If we go take a look at the now this is where it's going to get pretty cool because we're on September 1st, okay? So what's cool here is this, is that we did last month 269 million shares versus 750 million at the last high that was generated out here. So correlation-wise, check it out again. 369 million versus 750 million. And you failed, by the way. Okay, you closed underneath it. That's what you also did. No, 1 second, hold it. 115.75. No, you closed above it. You closed at 116.44. So you closed above it, which says that you can go test it again. But you don't have, the volume's just not there. And then you do have the volume on the way down. On the way down, in January, we did 1 billion shares. In February, did 942 million. We do the same. We'll look at the same setup inside the SPY on the monthly basis. And what you're going to see inside the SPY is this. We're at 217. 39 right now. The SPY did 1.5 billion shares, and that was going against 2.4 billion. Pretty intense. So tomorrow morning, that's the number. Gold contract. What do we have with the gold contract? Gold contract out here, folks, had a high today of $1,318, had a low of $1,305. That's a sideways move. I expect what we're going to see is that gold's going to make its way down into the 1259 area. Now, that being said, there's no doubt the XAU, the HUI, you got a bounce out here today. My take on this bounce, however, is that it's going to come right back at us. And what I mean specifically, the XAU was up $3.15. You know, we're trading at $93. We're down from 114. You could get a bounce to 94.81, but that to me is a B to C of an ABC structure on the way down that does want to take this into lower price. The Gold Bugs Index, same type of setup, is out there inside the Gold Bugs Index. That bounced $9.20 today. You're at $230.96. These bounces, if we go take a look at Barrick Gold, which is the largest weighting structure inside the XAU and the HUI, bottom line, you bounce at 22 million shares after coming down with 36 million shares as well as 30 million shares. So bottom line, I don't think that the downdraft is over yet. If you go to the front page of TFNN, I'll explain in the next section, but we do have a special going. It's my 750th edition of the Gold Report coming this Tuesday, 14 and a half years. We started out in gold at $282.50. Pretty wild. Bonds. What do we have with bonds? Okay, so bonds tomorrow. Here we go. 8:30 tomorrow morning. It's going to be wild. Bond market out here today. You did 1.2 1.2 million contracts. You are at $130.31. And what that is doing, that pushed under the consolidation that it's in, meaning the $130.26, and you push with volume. So that's telling me the bonds are going to be right back downtown tomorrow with this jobs number. And specifically what that would mean, if that's the case, is that inside the jobs number, you would come down, you would have a good jobs number. The market would react and say, okay, we got a good jobs number. The Federal Reserve has more information in order to raise short-term rates. And I don't expect them to go up in September. December, I think it's game. 30-year bond, same type of setup. What you have out here with the 30-year is a 171.31. 1 second, I got to put the December contract up. We're in December. We're at 170.17 in the December contract. You've done 239,000 contracts. Bottom, same setup. That's a move, a sideways move, and we'll finish up with this good old dollar, because the dollar index today, what it did do is that it rejected the highs of its day of strength from the 26th, had lighter volume, 19,000 contracts versus 41. That's saying the dollar also wants higher price. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish down up 18. NASDAQ was up 13. S&Ps were up $3.50. And if you come over to our website at TFNN, folks, what you're going to see right on the front page is this coming Tuesday, we have a special that's going on. It started an hour ago. It goes until this Tuesday. And what it's all about is that I'm going to be writing the 750th edition of the Gold Report this coming Tuesday. 14 and a half years. It's a mind blower, actually. Bottom line is that this is what the promotion is. You can get the Gold Report for 1 year for $750. Normally, that would cost you $1,020. And that's whether you're new to the Gold Report or you're adding on to your subscription, either or. That's the first part of the promotion that we're doing. The second part, which they're two separate promotions, but they're tied together, and I'll show you how they're tied together. The second part of the promotion, which is also good from today until Tuesday, is that we're doing a Tiger Dollar sale. Now, when we do these Tiger Dollar sales, you can buy a certain amount of Tiger Dollars. We give you a bonus. Tiger Dollars have no expiration date. They're good for all product at TFNN. And the way that it works is this, is that you can buy $600 in Tiger Dollars. You will get $750. So that's a 25% bonus. And the $750, of course, has to do with the celebration for the 750th Gold Report. The second one is that you can buy $1,500 in Tiger Dollars, and you will get $2,250. Now, that one there, the 50% bonus, I don't believe we've done anything like that for about 10 years. Bottom line, you get a 50% bonus. That is $750 free inside the context of Tiger Dollars. So if you do have any product at TFNN, if you're looking to buy any product at TFNN, great time to do it, great time to sign up. And if you're looking to, the Gold Report, folks, is a investment vehicle. Right now, we're flat in the Gold Report. We rode the Gold Report up very, very nicely from last January into the June and July time period. We've been flat for about a month. And if you do get this, I don't expect any buys for a few more weeks, because my take on the gold market right now, that's not done going down. That's the first part. If we take a look at whether it's the XAU or the HUI, where I'm going with this is that if you take a look at the XAU, what you're going to see is that we went straight up. We started in January. XAU is trading at $41. It was a straight line move. It was an incredible move, actually. $41 to $114. Okay, so what do you have? When we were going up, you were going up, had price, had volume, have all of the above. Well, where we are at this particular point is where we did have some really good volume, and that was in June. So the high of June in the XAU was $94. The low was $87. And we had, this would be a place that you could get a bounce. My take on this bounce today is that it's a short-term bounce because when you take a look at the equities, I suspect that we want to go back to where we actually broke out from in June, which is approximately the $78 price point inside the XAU. If we go over to the Gold Bugs Index, what you're looking at is that bounce today, $9.50. You're at $231. You put this on a longer basis, and what you're going to see is this. You're going to see that we started out in January at $99, straight line move up to $286. You're at $231 right now, and inside the Gold Bugs Index, your high volume price point was $222, which I believe we hit. We hit $219. That being said, bottom line, it looks to me like this really is only a halfway move down because it looks, I suspect, that the Gold Bugs Index wants to get into the 196 area. Because once we made it inside this 233, it's like you're going back to the beginning of that bar, which really runs down to almost 170. So we'll see where it shakes out. We're going to get a huge amount of information out of the marketplace tomorrow. This number tomorrow, and the reason the number tomorrow is I suspect a larger number, and the market is looking at that is twofold. We have been going sideways, and we've been going sideways since the 14th of July. Okay? That's the first one. The second one really has to do with the aspect, do you think rates are going to go up at all or not go up? So I'm flipping from the broad market, and my take on that is that we've had distribution at highs. What they did at the close again today, volume came in at the close again today. Bottom line is that volume, we're at 550 million 10 minutes before the close. We did 828 million. Yesterday, we're at 600 million. We did 1.1 billion. Okay, so that to me is they're unloading at the marketplace and they're unloading at highs. Now let's go back to the gold market. And what you have with the gold market is this. Gold, US dollar, is dependent in a huge way. Where the dollar goes, folks, gold across the world is priced in dollars. The dollar's at $95.60. A good jobs number tomorrow, it looks to me like the dollar wants to run up to this 97.61. That's your short-term deal. The longer-term deal, and that's why even when I put together the fundamental and the technical of it, is that these rates, the gold market and the silver market, my take is don't want to move higher until the Fed actually does at least a quarter point. So, and this is why. What happens is that the way that the Fed had set this up last December was first they said they're going to go a couple times. Then they start sending a couple Fed governors out saying a one and done. Now, they have September, November, and December to raise the rates. Right now, the probability is 34% September 21st, it's 39% November 2nd, and it's 58% December 14th. I suspect what's going to happen is that December will be the rate hike, and a 0.25% is not going to do anything, meaning to the market. Because what's going to happen is that the market itself is already going to react and has reacted, has pulled back. If we stay with the metals market for a second, what you're going to see is that the equities led the contract down. The gold contract itself, bottom line, hasn't been hit that bad at all. When you're talking about going all the way back all summer, gold had hit 1384. It's not a big deal where it is right now. You start putting that together, the market itself is just waiting to say, okay, is it a one and done once again? And that's what I expect it's going to have. But guess what? Then you've had the chance to get back into these equities at dramatically lower prices, because when you take a look at some of these equities, it's pretty amazing how much they've already retraced. If you take a look at the largest weighting, one of the targets are asking the components of the XAU, the largest weighting is Barrick Gold. You know, Barrick Gold started out in January at $7.40, goes up to $23. Right now it's $17.80. And to me, that's the halfway move. And Barrick's a good one to watch. Barrick wants to get down $12 to $15. This is Tom O'Brien. This is TFNN. Don't forget, folks, you go right in the front page of TFNN. Take advantage of the 750 edition of the Gold Report, as well as Tiger Dollars. We're going to be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished up 18, Nasdaq up 13, S&P's down 2.5. And folks, if you do want to take advantage of the Gold Report special as well as Tiger Dollars, if you are calling the office, the reason that the phone is just ringing is that we have a tropical storm here, and I let everyone go at about 1 o'clock this afternoon. So you can get these online, but you can call the office tomorrow morning. The storm should be out of here tonight. We're lucky. That's the bottom line. High tide was at 12:15, and yeah, we get the water. Bottom line was coming up at the beaches, and we can overlook the beach. But the bottom line is that So tomorrow morning, you get any questions? Just give the office a buzz, and we'll be more than happy to take care of you. Okay, so HYG, one of our targets, want to take a look at the HYG. I think this is a high-yield bond fund. Okay, so this is the iShares U.S. high-yield bond ETF, exchange-traded fund that's traded in the U.S. Okay, so the low in this for the year is 75. The high is 87. And yeah, I mean this is an indication this wants to go lower also. You know, you hit a high a couple days ago. Let me actually put this on a monthly for a second. Oh, look at this. Oh, interesting. This is really, wow. So this is intriguing actually, because this has highs of 96 and you're at 86 right now. And I guess high yield bonds have gone down already. Yeah, I mean, this is something, if you're selling, I'd sell it. I wouldn't be buying it. That's the bottom line. And what you do have, folks, is that the XLU. Let's go over to the XLU for a second. So this is the utilities select sector. Now, this is a sector, good move, going shop, Mike. This is a sector that if, in fact, the jobs number comes in hot, the bonds are going to go lower. Our 10-year, meaning our 30-year bond will go lower. And what you'll get is that the dividend companies, and that's the utilities, will also go low, and they'll go lower very quickly. You know, you can see that this company, this ETF here, already came off its highs of $52. You're at 48 right now. This is building cause, and this is a great indication, man. This is interesting. So check it out. So we have a swing point that was at $40.09. That low, right, $49.09. Right now you're at $48.98, and you're only slightly below it. But guess what? You get another high volume swing low that's trading down here from April, which is $46. We go put this on a monthly, and ooh, this is pretty cool. On this on a monthly, looks to me that you have, well, it's 47.48. That's not that far down from where we are. It would need big volume, because when we went up last February, we went up from $45 to $47. You went up with big volume. So it's going to be how we come into that high of that high volume day. Because if we go back to look at the dollar, what you're going to see out here today is this. What the dollar did, now the dollar did not hold price when this morning the manufacturing number come out. The PMI number come out, folks, and it came out at 49. And anything under 50 means you're contracting. Well, what happened with the dollar? The dollar was trading at $96.18. It went fast, furious, right down to $95.59. Well, guess what? That $95.59, what it was doing, what it did, is that it went into the high of the day of strength from last Friday. It rejected that high, and it had lighter volume. So 19,000 contracts versus 41. So it's going to be really cool watching this thing shake out tomorrow. Because when we did that last Friday, what that did, that had broken the downtrend that had been in place since July 25th. That's how that's shaken out. You know, so bottom line, you can expect high volatility out here in spades. Tesla, let's go take a look at Tesla. There's a story in the Wall Street Journal this morning that not only Tesla needs cash, Solar City needs cash, and this is after Tesla just, bottom line, had done a stock offering and collected 1.2 billion shares. So Tesla comes down today with 7.9 million shares. It's going after a high volume swing low out there of 195.75, and if we put this on a weekly basis, what you're going to see is, yeah, this is dangerous, man. This thing wants to get down to 163 to 145. That's the way this is set up right now. It's coming down. It's coming down with big volume. Put this on a monthly for a second. Okay, so, yeah, so what you did last month is that you tried to get to a high. This is pretty cool. You went to a high, of 236 and you did it with light volume. You only had volume of 62 million shares, and the 62 million was going against 115 million on the way down. So bottom line is that this thing wants to go into 199, more than likely wants to go into 141. And one of the problems has been shorting the stock is that you have a 23% short position. So this is an equity that has been losing money hand over fist, but it's not only just the losing money, folks. What it is with Tesla is it's the burning of cash. The burning of cash is absolutely phenomenal. And now if they're going to get together with SCTY, they're going to merge, or at least they're going to vote and merge with Solar City. Solar City is burning cash in an extraordinary way. Solar City has a high volume low out here of $16.50. That looks like it's going to go after that level. And Solar City has a 30% short position. So, yeah, and his luck today wasn't a good day for Elon Musk, because what also happened is that his SpaceX, one of the rockets that were going up this morning, unfortunately blew up on the landing pad this morning. No one was in it. It was a test rocket. But bottom line, you stop putting one on top of the other and get some problems there. Inside the oil market, what do we have with oil? Oil looks like it continues to want to have lower price. What we have with oil is this. With $43.51, it's pretty amazing that, oil went right up to ICE and couldn't handle it. ICE in the oil market, folks, in this contract was $49.53. We got to $49.36. And what do? We come off that level, and you come off with some volume. So what you have now, we did 573,000 contracts. That's a big number today. Yesterday, you came down with 549,000. Today, 573. That's setting up. It's going to go after these lows. They bring this back to a continuous contract. And this is not even on strength of the dollar. This is CL1. This is just because we have so much oil out there, because the dollar went down today. And guess what? Oil went down. If the dollar goes up, forget what oil wants to do, because it looks to me like, number one, it's going to go after the $39.19 once again. And if you break that, we break that 37 is game. You stay right there, folks. We're coming right back. Don't forget, you want to take advantage of the 750 edition of the Gold Report, or get Tiger Dollars. We just started the promotion an hour ago. It goes till this Tuesday. Check it out on the front page of TFNN. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And don't forget, folks, at TFNN, Monday, Wednesday, Friday, we start live programming 8 o'clock in the morning. We go to 5 in the afternoon. We take that programming, replay it all night long. Tuesday, Thursday, we start at 7 o'clock in the morning. We go to 6 in the afternoon. We do the same. All of the programming, folks, you can get right on your cell phone. It's a great vehicle to listen to TFNN. You hit TFNN.com. On the right-hand side, it'll say Watch Tiger TV. You hit that button, you're going to see great HD audio as well as video. Now, right after my program tonight, we got our man, Mr. Andy Heck, outstanding show, the Technomental Commodity Hour, 5 to 6 o'clock. Tomorrow, 8:30, jobs numbers. So check it out. Even when I was doing the interview with Andy, he was talking about the aspect that the jobs numbers in August normally aren't that good. Well, here, let me give you some numbers here, because it's pretty cool watching this. This is Bloomberg that just come across. The consensus among economists polled by Bloomberg anticipates an increase in August non-farm payrolls of 180,000 private jobs, modestly below the moving average of the last 6 months, which is 189,000. And for the last 12 months, it's 204,000. So there's been jobs piling up in a big way. The range of forecasts spans from 92,000 to 255,000. That's pretty wild. Bloomberg economists expect an average consensus closer to 215,000. Man, if we come in with a 215,000 job market, folks, the bonds will go south. The dollar's going to go north in a big way because that's a big number. Next point. August payrolls have shown significant downside bias relative to the consensus forecast in recent years. In fact, payrolls have fallen short of consensus every August from 2011 to 2015 by an average of 49,000 jobs. A continuation of this pattern would imply that a payroll result closer to 130,000 jobs. That said, over the past 2 months, payrolls have significantly exceeded the consensus estimate. So there is compelling bias at play in the upcoming report. The median forecast for the unemployment rate calls for a 1/10 decline to 4.8% in August, just a tenth above its cyclical low. The rate has experienced an extended period of stability, holding a range from 4.7 to 5.1 in the last 12 months. That last similar period of stability occurred in 2007 and was centered around 4.6 compared to 4.9 at the present. The stickiness of the rate just below 5% could signal that the economy is closing in on full employment. Consensus projects no change in the length of the work week, which is $34.05. 34, that's pretty wild. From a perspective of worker output and employment-generated income, analysts should evaluate the payroll change in a broader context of fluctuations in the work week and therefore total hours worked. Average hourly earnings growth will provide important insight as to whether the labor market is witnessing mounting wage pressures so as the economy approaches full employment. Consensus estimates 0.2 increase in the month, which will allow a year-on-year trend to slip to a tenth, will slip 0.2% to 2.5%. Pretty amazing. So bottom line is that, when you go through this, the numbers that keep your eye on is that you have one poll, which our economists that Bloomberg polled, and they're saying 180K. That's the number. You have a Bloomberg economics team that are thinking that it's going to be coming in way above that at 215,000 jobs. The low in the last 12 months was 92,000, and the high was 255,000. So we're going to have some action out here. There's no two ways about that. Let's go and we take a look at, in that context, let's go take a look at the banks. So if we take a look at the XLF, the XLF is trading at $24.46 because theoretically, if we're going up on rates, bottom line, banks should look pretty good. Well, the thing that's pretty wild is that, banks don't look good, and the XLF doesn't look good. The XLF is trading at $24.46. Last month, we did volume of 660 million shares, and you're going into 1 billion shares. And it couldn't make it to the price point of $25.45. If we go take a look at JP Morgan, which no doubt between JP Morgan and Wells Fargo, you got a leader out here. JP Morgan would be, of course, the investment bank business. Wells Fargo is still, I believe, one of the largest mortgage businesses out there. So if we take a look at JP Morgan, what you're going to see is this downdraft that had been created last August. The bank's having a tough time with it. JP Morgan was up with 263 million and going into a 374. Wells Fargo, we take a look at Wells Fargo. Wells Fargo is at the top of its range, $50.43. We go back and we look at this. Same type of setup, though. Wells Fargo is up with 356 million. You're going into, this is pretty good, actually. You're going to 383. So it's still lighter, but you can see Wells Fargo has more juice than JP Morgan does. That's pretty cool, man. Let's go take a look at Citigroup. Actually, BRK. Let's go take a look at Berkshire Hathaway. Berkshire Hathaway, folks, is the largest weighting structure inside the XLF. So Berkshire, the B shares are trading at $150.35. Those are at highs. The high is 152, so you're at a high. You did volume of 62 million, and you're coming into 92. Now, Berkshire doesn't want to make it high either. Wow. This is going to be cool watching this one shake out because you have Berkshire at highs. And, we're trading right where we were trading in December of 2014. And you're up there with light volume. And it couldn't make it last month. So Berkshire in itself is saying, now, of course, they own so many businesses, but that's why they're in the financials. We go to Bank of America. Let's take a look at Bank of America. Bank of America is at $15.98. This is having a tough time from last January. So we went up, and we went up with 1.8 billion versus 2.6 billion. Now that correlation there is saying that bottom line is that, guess what? Even if we get a rate raise, the banks aren't going to go anywhere. And then you can make the argument saying, okay, maybe we don't get a rate rise. The way it looks to me is that if the number comes in hot, what's going to happen? The market's going to think the rates are going to go up sooner rather than later. The market tanks. The Fed is a deer in headlights and barks again. It's going to be wild. Don't forget, we are on live, too, tomorrow morning, 8 o'clock, folks. So, stay right there. We're coming right back. But bottom line is that you get us right on your cell phone. TFNN.com, at Tiger TV. Right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And folks, as you come over to TFNN, you're going to see right in the front page, coming this Tuesday is going to be my 750th edition of the Gold Report. Pretty wild, actually. We got long gold at $282.50 14 and a half years ago. And, of course, it's a tradable vehicle. That's the bottom line. We're doing a celebration. We started it an hour ago. It goes until Tuesday. And the celebration is this. Normally, if you do a monthly deal in the Gold Report, it's $1,020 a year. You can get it at $750 for the year. That is the first part of the celebration. Second part of the celebration has to do with Tiger Dollars. So we're going to have a Tiger Dollar sale that started 1 hour ago. The way the Tiger Dollar sale works, you have 2 different buys. You can buy $600 in Tiger Dollars, and you get $750. So the $750, of course, is in the $750 celebration. That is a 25% bonus. Tiger Dollars are good for all product at TFNN. No expiration date. The second buy you could do, you could buy $1,500 in Tiger Dollars, and you get a 50% bonus. That's $2,250. That's a $750 bonus. I don't believe we've done a 50% bonus in about 10 years. So if you do have product at TFNN, if you're looking to buy something at TFNN in the future, that's a great way to save a huge amount of money. If you happen to want to be in the metals market, bottom line is that the Gold Report is an investment vehicle. It's a longer-term vehicle. We rode this up nice from January right until July. We have been flat in the gold market now for approximately 6 weeks, and we've been looking for this retracement. We got the retracement, and if you do get it, I don't expect we're going to have a buy for a few more weeks either. I wouldn't be buying any of these right now. It looks to me that the dollar wants to get higher, and the metals market in general looks like they want to do between a 0.382 and a 50% retracement of the move higher from January through June and July. So we'll see where that whole thing shakes out, but it certainly gives you a great chance once again to get into these equities at lower prices. If you take a look at even just First Majestic, it's intriguing how some of these ran. I mean, they all ran big time. First Majestic had run going from a price point of $2.69, ran up to $19. You're at $11.79 now, and I don't think it's done. I mean, I think First Majestic, you're going to have a shot at it between $10 and $8.20. And the cool thing is that they have volume on the way up. It was the extension. The extension was way too fast, too long. And the reason that you're getting such a large pullback, and this is where you always want to wrap your head around the percentage moves, because of the move that was so dramatic on the way up, when you take a look at this, First Majestic is almost at the 50% mark. The 50% mark would be $10.77. Well, what golds love to do, folks, is go a little bit further. They extend themselves on the way up, and they extend themselves on the way back. But what I suspect we're going to get a lot of nice buys at lower prices. Okay, so you can check both of them out right on the front page of TFNN. The promotion is good until Tuesday. And the scary thing is, well, the scary thing is that 14 and a half years, I remember the day that I started, and I want to thank one of the Tigers, our man, Mr. Dale Petz up in New Hampshire. He was helping me tremendously, actually, for that whole year, setting up the charts, setting everything else up. And we had started it, and I'd started in the summer, man. It was so hot because there was no air conditioning in the office. But guess what? It's a beautiful thing. We're alive and kicking. You stay right there, folks. I'm Mr. Andy Hex coming up next. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking right back here. Hey, 8 o'clock tomorrow morning. Stay tuned. Stay tuned for Andy, folks. Wow! Go get him.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.